Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and leave a 5-star rating. Okay, folks, we have a big update around the Clarity Act. So, time is of the essence for this bill, and Congress is back next week on July 13th. So, hopefully, they can fast track the process and make some progress. But here's the headline: newest version of the Crypto Clarity Act may drop as soon as next week, sources say. So here are the details from this article. The U.S. Senate legislation that would regulate the crypto industry is wobbling forward in what are likely its final days as a viable effort for 2026, and advocates expect a new draft could emerge as soon as next week for potential Senate action later in the month. So I think we are going to get some sort of update. Obviously, there's no guarantee that this bill passes. And as I've been saying in the previous podcast, time is of the essence. Our hard date is August 7th because Congress and the Senate, they all go on recess on August 10th. And then come September, it's heading into election season. It's a midterm election year. So everybody's going to be busy. It's going to be hard to get things done. Not that it's impossible for that bill to pass come September or even later in the year, such as December, but the probability decreases significantly just because of the election cycle. But if Congress is able to fast track this and get some things done, this bill could potentially pass the Senate within the next 2 weeks, and then it goes to the House, and then President Trump signs it into law. So we need to get it out of the Senate. That's the big hurdle. Remember, the House passed the first version of it when it was called the Fit 21. So the House is already on board. Now, there are some changes the Senate made, so this updated draft will have to be reviewed and passed in the House, but I don't anticipate any issues there. So the Digital Asset Market Clarity Act has just a few weeks left to advance in the Senate before the chamber's calendar and wider congressional politics leave its chances close to zero. But those briefed on the negotiations say they've seen some headway, including a new text that's come together in the merger of efforts from the two relevant Senate committees, the banking and the agriculture. However, legislative staffers signaled that the effort hasn't yet secured Democratic buy-in it'll need, despite much of the latest material representing a response on their concerns. Now, yesterday I shared the news of Senator Ron Wyden, Democrat out of Oregon, who was backing the DeFi provisions in this bill, which was passed by the Senate Banking Committee. So that's great, but you still have a bunch of other Democrats out there who are very much concerned about the ethics issue with Trump's connection with crypto. So hopefully they can find a compromise there to get this done, because remember, there is a larger ethics issue with markets. It's not just crypto. There's stocks. Trump is invested in stocks as well, right? And other members are also doing the same thing with gold and silver and much more, right? So it's not just a crypto issue, it's a larger ethics issue. So hopefully they can find a compromise there. So the unified version of the Clarity Act, which is said by one person to have had more than 70 pages of text added, hasn't yet solidified a position on the major sticking point, a Democrat demanded restriction keeping senior government officials, including the president, from maintaining business ties with the crypto sector without a compromise on such ethics limits. Several lawmakers have said they won't vote yes on a final bill. Maybe the compromise, guys, could be just meme coins. Maybe they say, look, any elected official should not have a meme coin. And I think we can all agree with that. Democrat, Republican, Independent, we can all agree no elected official should have a thing. And from day one, I was critical of the meme coin launched by President Trump and as well as the First Lady Melania. Those are horrible optics, as I've said many times. So hopefully that is enough for the Democrats to say, all right, we're good, let's get it done. And remember, Senator Kirsten Gillibrand, another Democrat, she introduced a bill just last week that is targeted specifically at meme coins. So maybe they can all agree on meme coins. That's the common ground, and we are able to get this bill done, guys. But we'll have to wait and see. The banks are still fighting as well. So lots in our way here, but obviously there's been a lot of progress made. And I think we have some sort of momentum here, especially that the bill cleared the Senate Banking Committee. Remember, even though Jamie Dimon was cursing Brian Armstrong out on TV and complaining about the bill sucks and much more, it still made it out the Senate Banking Committee. So I think we have a good chance. But time is not on our side, and hopefully they can figure out the ethics issue. So we shall see. Now, folks, Swift and the banks are getting all in on blockchain technology. And of course they are. Disruptive technologies here. And if they don't adapt, they will die, right? They will have their blockbuster moment. Blockbuster failed to adapt to the internet. And they had the opportunity to actually acquire Netflix. They didn't do that. We know how that story ended. So Swift launches blockchain ledger with 17 bank tokenized deposit pilot. So Swift and the banks are trying to build their own private chain network to settle payments. And that's fine, but they're not going to be able to run all the world's payments through that network. And remember, they still have to bridge many times to public blockchains. So while they may be able to move money between each other and so forth, there's more competition now with payment companies, crypto companies, and more, all leveraging stablecoins on public blockchains. So let me give you the details here. So 17 major banks, including HSBC, Citibank, BNP Paribas, UBS, ANZ, DBS, and Standard Chartered, are preparing to pilot cross-border payments using tokenized bank deposits on the new ledger Swift announced on Thursday. Now, many of you may recall that Swift's ledger was built on Linea, an Ethereum layer 2 network developed by Consensus. And the design uses an EVM compatible model based on Hyperledger Besu, but access stays fully permissioned. So it's a permissioned bank consortium chain, right? But remember, wall gardens don't work well. And this is why JP Morgan since 2018 was building Quorum. They now call it Connexus. It's a private fork, if I'm not mistaken, of Ethereum. And they tried to make it permission with the JPM coin and much more, but nobody wanted to use it. Why would I trust your coin? And public blockchains grew. And that's why you saw Jamie Dimon make that call to Elizabeth Warren and Gary Gensler to attack the crypto industry, because they realized, hey, nobody wants to use our permission wall garden. And we're seeing a lot of settlement happening on the public chains. But nevertheless, the banks will continue to try to see if they can grab as much market share as possible. And look, it's their right to do that. They're the incumbents. They're trying to survive. The part that I hated was the fact that they couldn't pull the strings in DC and weaponize people like Elizabeth Warren and Gary Gensler to unlawfully attack the industry. But that has obviously changed, and now they have to participate in the free market and compete. Go build something that people want to use, that people will trust, that is decentralized. But we know they don't want to do that. And in fact, they put out some article here today, literally today, that says JP Morgan says Bitcoin main risk isn't strategy, but blockchain adoption that doesn't benefit public chains and tokens. So essentially they're saying, oh, if tokenization and payments and settlement increasingly move to permission infrastructure rather than public chains, the broader crypto ecosystem could see slower activity, eventually weighing on Bitcoin, the analyst said. So this is their propaganda they're putting out because of what Swift just did today. So you see how this is all set up, guys. You see the scheme, the strategy here, right? They want to change the narrative. Look what we're doing with Swift. We got our permission private chain and all the banks are together and it's going to beat those public chains. Yeah, right. Get out of here. Again, the banks are fighting, but that's okay. It's a free market. And as long as you don't pull the strings in DC to unlawfully attack crypto and the industry, and everybody is all building together and may the best man win, that's totally fine. So the ledger will enable participating banks to support 24/7 cross-border payments, including overnight and weekend transactions, while maintaining existing compliance, credit, risk, and control standards embedded in current payment processing. The launch marks another step in banks' efforts to use tokenized deposits within regulated financial infrastructure while extending payment availability beyond traditional banking hours. So crypto started the 24/7, 365 market, as well as instant settlement and transparency on the blockchain. The banks are now catching up. So guys, clearly this technology is here to stay. Clearly, this is the future, because again, JP Morgan, Swift, all these guys were bashing blockchain and crypto for years. Now they're forced to adopt, so they have to bend the knee. And the other thing I want to highlight is that Swift is also leveraging Chainlink. Chainlink is a public chain, so they're using the CCIP on Chainlink. So again, despite the narratives that are out there, watch what they do, not what they say. they are still leveraging these public chains. Even though they're trying to create their walled garden, they still have to bridge to the public chains for settlement and liquidity. Moving ahead, guys, more bank news. So Sony secures conditional approval to set up US stablecoin trust bank. So yes, Sony, the tech giant, they have a banking division, and look at what they're doing, right? I actually interviewed the CEO of Bastion, which is helping them to do a lot of this, and Bastion helps companies to launch stablecoins. So technology giant Sony's online banking unit said it received conditional approval to establish a U.S. national trust bank subsidiary to support the issuance and management of dollar-denominated stablecoins. The planned unit, Connectia Trust National Association, will be based in New York and capitalized with $40 million. According to a Sony Financial Group announcement, Sony Bank will own 100% of the subsidiary. The move comes as stablecoin usage is surging. Transaction volume hit a $1.79 trillion record last month, 63% more than in May, and more than double the year earlier level, according to Visa's on-chain dashboard. So competition's heating up here on tokenization, on stablecoins, and much more. This is all great things you want to see. And the biggest institutions, whether they were TradFi financial institutions or tech giants like Sony, are all getting involved, guys. It's incredible. I mean, I hope you see the direction the puck is heading here. It is clear as day, right? They're all building with the technology, and no one wants to get left behind. Now, we have some interesting news here, big news around Chainlink, actually, and I'm a Link token holder. Many of you know that. So $7.2 billion has migrated from Layer 0 to Chainlink's CCIP since May's $292 million kelp exploit, with Mantle's $2.5 billion super portal, the latest to make the switch. So Chainlink getting tons of adoption here, guys. This is huge news. Again, I'm a Link token holder. I'm bullish on this project, and they are not only getting adoption from traditional institutions, I just mentioned Swift earlier, but also crypto native firms. It is one of the trusted chains out there, getting, again, lots and lots of adoption. So a big win here for the Chainlink folks and the network itself. And, they continue to lead in many ways. Now, final news item, Latin America's biggest stock exchange now offers options on Bitcoin, Ethereum, and Solana futures. So stock exchanges, banks, the biggest financial institutions in the world, it's not one country, it's not a handful of countries, it is happening all over, are all embracing crypto in one way or the other, offering investment products, building with blockchain tech, stable coins, tokenization, DeFi, and much, much more. So look at what's happening. So if you're in Brazil, you can now get exposure. So Brazil's B3 stock exchange has unveiled the options, and the contracts became available for trading on July 6th, according to B3 Circular. They include call and put options on Bitcoin futures denominated in Brazilian reais, while Ether and Solana futures are denominated in US dollars. The options settle into the underlying futures contracts, not the tokens themselves. B3 said the products do not involve custody, transfer, or administration of spot crypto assets. So you're seeing a variety of crypto investment products being built across the globe. And I know some of you are going to say, Tony, futures are bad. They're going to use it to short the market. Unfortunately, that's part of markets, right? You have the spot and you have the futures. This exists in for other asset classes, stocks. So you can't avoid it. But the good thing is that if you are a student of the markets, then you can use this to your advantage if you want, and understand that these things help to balance out the markets with bear markets, because bull markets can't go up forever, markets can't go forever. They have to have corrections along the way, and this, I think, is a way to balance out markets. Now, you got to make sure they're doing it right? No naked shorting and all these things. We know the controversies around that, but nevertheless, from a principle standpoint, these are things you can leverage as well, and they're being set up across the globe. So not only spot, but also futures. So incredible news. We are seeing crypto getting adopted at a rapid pace. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Check out our sponsor, iTrustCapital, where you can invest in crypto as well as gold and silver via an IRA. And the reason you want to do that is when you sell for a gain, you don't have to pay capital gains tax, long-term or short-term, because it's sheltered in an IRA. So that's a huge tax advantage. And you can buy and sell crypto, gold, and silver 24/7. It's low fees, no monthly fee. And they have a great custody program as well called Premium Custody Account, which uses Coinbase Prime. That's what BlackRock uses. So you're getting tier one level crypto custody. You can sleep at night knowing your assets are safe. And folks, if you sign up with my link, you can get a $100 funding bonus. And also, if you have questions as you're signing up, you can contact my special rep at iTrustCapital. His name is Ryan. His contact information will be in the description of the video, so you can reach out to him if you want to learn more. And go check out iTrustCapital, see if it's for you. Go to itrustcapital.com/go/thinkingcrypto. Link will be in the description. Be sure to sign up for my free email newsletter on Substack. It's 100% free. Link will be in the description. Grab a copy of my book on Amazon. It's available in paperback and digital. And if you want to expand your knowledge about crypto, check out my course at mycryptocourse.com. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.